Mexico secures a 1-month reprieve from tariffs by agreeing to send troops to the US border. All eyes are now on a call this morning between President Trump and Canadian Prime Minister Justin Trudeau. Gold and the US dollar rise amid the seesawing uncertainty. That's coming up in 5 Things in 5 minutes. And then in today's bonus deep dive interview, ANZ's head of Asia research, Koen Goh, talks about how Trump's tariffs are likely to drive the yuan and other Asian currencies around, with tomorrow's fix of the Chinese currency by the People's Bank of China being a key moment.
The critical level on the fix is 7.20. That was the level they have been defending since last year. And I think that's a good chance we might see that level getting broken sometime later this week.
But first, in 5 and 5 with ANZ. Global markets are reacting this morning to news that tariffs the US said would be placed on Mexico have been delayed for a month after Mexico agreed to send 10,000 National Guard members to the US border. All eyes are now on whether Canada can secure a similar pause, with President Trump and Prime Minister Trudeau set to hold further talks. Here's ANZ Head of G3 Economics, Brian Martin, after that surprise move in Mexico.
We'll know the outcome of that in a few hours. But it would certainly seem to be the case that if the president does feel that the countries bordering the US are being much more assertive in their attempts to deal with drug smuggling and with illegal immigration, then he is prepared to suspend the tariffs to await the outcome of negotiations. So it might well be the case that the worst case scenario does not materialise.
As of 4 a.m. Sydney Melbourne time, the US dollar index was up 0.5%. The Aussie dollar was down 0.5% at 61.80 US cents, while the Kiwi was down 0.8% at 55.9 US cents. Number 2, the volatility sent traders into safe havens overnight. The gold price was up 0.66% at $2,853 US an ounce. That's just off a new record high. The S&P 500, meanwhile, was down 0.75% at 4 a.m. Sydney Melbourne time, although it paired larger losses after the announcement of the Mexican delay. The 10-year US Treasury yield was down 4.4 basis points at 4.523%. Here's Brian again.
Gold retains a safe haven quality, and I think the reason for that is because there's very, very elevated uncertainty in the global environment at the moment, whilst tariffs on Mexico may be delayed for a month. That's not to say that Trump won't impose tariffs on Europe. We don't know what's going to happen with tariffs on China. At this stage, we don't know what's going to happen with tariffs on Canada yet. So there's still a huge amount of uncertainty, and gold plays well into investors' concerns.
Number 3, Australian retail spending was much healthier than forecast going into Christmas. December quarter retail volumes data published yesterday showed quarterly growth doubling to 1%, and there was just a 0.1% fall in nominal sales in the month of December from November. That was the best December since 2019. Here's ANZ economist Maddie Dunk on why that 0.1% fall was actually better than expected.
The December print actually declined slightly in the month, but is quite normal for retail sales to fall in December, and that's because we now spend a lot more money in November than what we used to. So there's some shifting seasonal patterns going on, which mean it's normal to see a December fall. And I think the critical thing is that the December decline wasn't as big as we and the market were expecting. And that might be partly due to the fact that a couple of the days of the Black Friday long weekend actually fell in December. So the Sunday and the Cyber Monday were both in December this year, which likely did support December retail sales.
Number 4, Australia's labour market is also looking robust, with the ANZ Job Ad series showing a second month of stabilisation of job ads. Even though they're down 15% from a year ago, they're still 15% above the pre-COVID average. Here's ANZ economist Sophia Angala on how Australia's economy was able to grow jobs with relatively low wage inflation, even though unemployment remains relatively weak as well.
Our labour demand has been robust in 2024, with employment growth up just above 3% year on year. And this has been met by an increase in labour supply, supported by population growth and the rise of the participation rate to an all-time high of 67.1% in 2024. So we have that robust demand for labour being met by an increase in labour supply.
Number 5. India's central government's budget delivered on the weekend included income tax cuts and a higher fiscal deficit than expected. So how does this change the landscape for the Reserve Bank of India ahead of its decision on Friday night? ANZ economist Dhiraj Nim says the fiscal impulse is actually less negative or contractionary than it was, but it still remains negative.
Now, this means that the onus of supporting growth shifts to monetary policy, which is due to be reviewed on 7th February. And the Reserve Bank should start cutting the policy rate. So we do not think that budget projections will obstruct the Reserve Bank of India's monetary policy easing.
Dhiraj Nim there. Now, in today's deep dive interview, I spoke to ANZ's head of Asia research, Koen Goh, about how Trump's tariffs were likely to drive the yuan and other Asian currencies around, with tomorrow's opening of China's markets after the Lunar New Year being a big moment.
China markets are still closed for their Lunar New Year holiday and will reopen on Wednesday, the 5th of February. The fixing on that day will be very closely watched by markets. I expect the PBOC to start to allow the yuan to weaken response to the additional 10% tariffs on Chinese goods. It does not make sense for the PBOC to keep the yuan stable when you're facing with such a large increase in tariffs. So I do expect them to start the process of allowing the yuan to adjust. The critical level on the fix is 7.20. That was the level they have been defending since last year. And I think that's a good chance we might see that level getting broken sometime later this week. If so, that's going to signal that the PBOC are allowing the currency to weaken, and we should start to see that responding in not only the yuan, but also having a spillover effect across the other Asian currencies as well.
And if the authorities do let the yuan go through that support level, how far could it go?
Well, our forecast is for the yuan to weaken towards 7.50. So I'm still sticking to that forecast for now. I mean, theoretically, given the additional 10% tariff, if the currency were to fully offset the tariff impact, then we'll be looking at the yuan weakening towards the 8 level. But I don't think the authorities will allow the currency to weaken that far. I believe they will allow some adjustment to the exchange rate, but also try and support the economy through fiscal and other monetary policy means.
And what about the other currencies in Asia that might be affected, and how far could they go?
Well, typically, the currencies that tend to have quite a high correlation to the Chinese yuan, the Malaysian ringgit, and the Korean won, and the Singapore dollar as well. And not surprisingly, all these three currencies did weaken today. If the yuan were to be allowed to weaken further, and especially if it gets towards our forecast of 7.50, then we can anticipate much further weakness for those currencies as well. So, for example, the Korean won could well head towards the 15,000 level. The Singapore dollar, for example, it was flirting with the 1.37 level. I think that will probably break, and then there's a possibility we could be looking at a move towards 1.40, for example, in the event that the yuan is allowed to weaken.
And what about the prospects we could be saved at the bell by a reversal in the case that the United States believes that the fentanyl imports and illegal migration is enough to stop the tariffs?
Well, I guess the markets might be holding up a sliver of a hope that there could be an 11-hour reprieve, just like how Trump's tariff and sanctions against Colombia over a weekend was subsequently reversed when Colombia basically caved in. In this instance, however, given that we are talking about flow of illegal migrants and fentanyl flow involving three separate countries, I think it's going to be a lot harder for these countries to, satisfy President Trump's desires for addressing what he sees as a large flood of illegal immigrants and the fentanyl flow. So I think the odds of a last-minute reversal, whilst probably greater than 0%, I think is pretty slim. So I think markets will have to brace themselves for full brunt of the tariffs being enforced on Tuesday, pretty much 1:01 p.m. Beijing time.
Couldn't go there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, February the 4th. Catch you tomorrow with a preview of New Zealand's labour force data for the December quarter, which the Reserve Bank of New Zealand will be watching closely ahead of next Wednesday's first rates decision and monetary policy statement of 2025. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.